Vinit Sambre joins us, and lots to talk about in terms of themes, ideas, value, and what is happening to the good old defense and PSU space. Vinit, good morning. Thank you for joining us. Just when we
Hi.
thought that the market was running out of tailwinds, crude is down, FIs are back, and global macro is favorable. So, do you think just when the market was looking tired and valuation concerns were galore, now markets have got another, macro, push, so to speak?
Yeah, and even the FIs have started coming in. So, so I think Nikunj, first of all, while we all understand that the valuations have been high for a while, and there has been a disconnect between valuations in few pockets as compared to the core, let's say the growth, the other metrics. But as far as the markets are concerned, the macros are concerned, we are in a good shape today, and I can say we are in the best form today, considering the growth, the oil prices, the maybe the fiscal. So all of these and the external balances. So all of these makes India shine through in terms of the macros. So nothing to take away from that. But more importantly, I think what will eventually drive the markets in the long term is going to be the growth. And our eyes are basically on that matrix significantly. And we believe that till the time you see visibility of growth being there, I would say that markets should sustain. And any risk to, let's say, the growth which we are targeting 15-16% kind of growth, if that gets challenged, then I think we'll have some kind of consolidation for ahead. But as of now, I think the macros are pretty strong. Markets are, the flows are coming through both from the domestic and international markets. And hence, I would say that markets look like sustaining the momentum as of now.
When you say sustaining the momentum, is it because of flows or is it because of fundamentals?
I would say fundamentals not deteriorating is just important for the markets to maybe not correct. That is one important aspect. And flows are a matter of a FOMO, or everyone wants to participate. At some point, some small corrections leads people to put in money. So that will be on and off, but I would say that flows will keep supporting till the time the visibility of growth doesn't get deteriorated. So the more important thing for me to sort of focus on would be the growth metrics.
So, Vinith, wanted to understand whether there's fresh money coming into small and mid caps, particularly, or people are now opting more for flexi cap or large cap as a theme.
I think interestingly, we are still seeing money flowing into the small caps and mid caps as a category. And while this skew has moved towards the thematic funds significantly over the last maybe 2 or 3 months, but the flows in the mid and small cap still continues. And I think the important trend to sort of maybe be aware about is that when we are talking about growth in India, while we can have these labeling around the large cap, mid cap, small cap. But the growth also is broad based, and we see that a lot of the segments which are principally within the small and mid cap space are also seeing benefit of growth coming through. So I think that is maybe keeping the interest level high as far as these categories are concerned. But if you ask me personally, my opinion at these kind of valuations, it is okay to have exposure to mid and small cap, but just that given the valuations, the time horizon investors should now sort of think about, especially in the small and mid caps, has to be clearly 3, 4, 5 years, not anything less than that. I would say one should remain cautious because these are very exciting times, but markets could remain volatile, and in bad times, I think there could be periods of volatility in these categories. But long term, I think investors, they have created that these categories have created wealth, so we are not as much worried on that account. And especially the other point I would like to say is that SIP could be a good way to deal with the high valuation at this point, because as you keep investing through cycles, your average cost keeps becoming optimum.
Quite interesting. So, Vinit, curious to know, is it more of the same that you're recommending or putting money into small caps, or are there newer opportunities that have now sprung up?
So I think largely more of the same, but just that the some of the inter sector dynamics keeps changing. Like we saw that the defense pack has seen some bit of slowdown right now in terms of the order momentum. Likewise, I think some of these engineering companies are also seeing some bit of a slowdown. And incrementally, the assessment is that maybe the IT sector could see some recovery given the US is going through the interest rate cut as an environment. Consumer as a category, the commentary has been positive. We've not seen major recovery, but there could be some recovery because we already seen inflation remaining under control. Monsoons have been good, so that could drive some bit of that growth. So I think, and let's say real estate has demand has been very high, but the building material as a category has not seen the flow through in the demand. So I think incrementally it's just that how do we sort of keep moving our balance within these segments is what I can say.
Touched upon a number of sectors, but we just wanted to understand what the outlook is when it comes to the entire PSU and defense sector and some of those, stocks that were so talked about in 2023. While there was a bit of a comeback, they have, of course, fizzled out. What's the sense that you're getting within this entire cluster?
So clearly, I think the opportunity is still there. Businesses, and we particularly go by the dominating nature of the business, the capital efficiency of each of these businesses, and we believe that there are amongst various PSUs, there are couple of them which does have dominating profile. They have decent ROCs, and I think overall over the last 2-3 years, we have seen that the managements have become slightly more aware about they need to deliver efficient growth, capital efficient growth. So we would still be looking on to those businesses, and we've already seen some consolidation. I think expectations were built up quite a bit. People were expecting that government will announce that 100-day program. All of those seems to have sort of disappointed some bit, but we don't see letdown in terms of growth if the economy has to grow. And hence, at certain points in time, we sort of open to look at some of these names. But as of now, I think the momentum seems to be a bit slow because of the reasons I mentioned.
Okay, fair enough. What about the kind of liquidity flow that we've seen? Because FIIs have decidedly either not really participated or been on the fence for the most part, and it's been a very domestic driven rally for our own markets. Is that going to continue?
So clearly, I think this is one of the important fact why I believe that markets should not see big declines because I think the dips are going to be used by all sorts of investors to build positions. I think you are absolutely right. FIs have been on the sidelines. Even our interaction with a lot of them suggests that they are pretty much sold on India macro story. They all understand the story. They want to participate, but just that some of them are a bit cautious around the valuations. And the moment we have some bit of easing out on valuations, investors will want to come into and participate in the long-term growth story out here. So I would say that this will keep the maybe the declines will be shallower and you will keep having the market strong unless you have some Six Sigma kind of event. But I think broadly we will keep seeing the foreign flows coming through and wanting to participate in our India growth story, and especially at a time where other economies actually the second largest economy, China, has been dwindling, and I think that is also an incremental positive as far as India is concerned.
Vinit, you've made a very interesting point in your notes that there are two sectors which are currently, you believe, at inflection points. That specialty chemicals as well as IT. Help us understand that, which way do you think these sectors would head? Because a lot of question marks, a lot of underperformance has been behind us. Nifty IT already is scaling at an all-time high and individual stocks as well within that. But does it seem like this is a sustainable move ahead, both for specialty chemicals as well as IT?
So see, talking about IT, I believe that they have gone through bit of a slow phase, and till let's say fourth quarter of last year, they were all sort of talking about slower built up in terms of growth momentum. Incrementally, what we are seeing is that the commentary has started improving on the BFSI front, which is the banking financial insurance as a category. There, I think the companies are seeing slight bit of recovery. And the assumption here is that, the fortunes of the IT sector are actually linked to the US companies. And, as the US goes through a cut cycle, that will, bring in some bit of, growth momentum for the companies out there. And that is one of the premise why we are sort of thinking about IT as a sector as of now. Although the price moves have been pretty fast and we didn't anticipate, the quick up move. Nowadays, the narratives actually take over significantly, and hence, I mean, at any point in time, the room or the margin of safety becomes very low. But still, I would say the momentum should sustain, is I believe, as far as the IT sector is concerned. On the specialty chemicals, while I called out that specialty chemicals as a category, but let me clarify that it is not a homogeneous sector, and each company, the metrics are different. And we are still seeing challenges with some companies. Some companies are slightly emerging better, where they have been able to crack new clients. And I think we are being very stock specific out here. Companies which had put up capacities and were reeling under pressure because of high capex and the business momentum being slow. I think incrementally over the next 1 year or so, I believe that the sector should bottom out, and let's say a major category, a major part of the companies, within the pack should start seeing the benefit. But still, I would say it is a bit challenging. Prices are still maybe subdued. The inventories are still high, and it's not a homogeneous recovery being called out by the customers out there.
Right, Vinith, just a quick word then on any interesting recent listings that you've observed, or your outlook on some of the new age tech companies in terms of valuations, trends in the IPO primary markets?
Yeah, so I think all the listings are becoming interesting given the interest level which we have seen, and there has been a massive pull up in the stocks, and we are witnessing that. But I think interestingly, we have been selective on two companies where we see profitability and return on capital employed being one of the criterias for us. And companies which have displayed those, we have been open to participate. But I think otherwise, in general, we have been a bit slow in terms of participating into some of these new age businesses, because if we don't see path to profitability in some of them, or there is a lot of high expectation built into the prices, then I think we've sort of stayed away, and we would like to watch them as some of these businesses becomes more interesting and relevant. Then I think we'll definitely we keep our assessment on, and whenever the right time comes, maybe we'll participate. But I think in general we have been slightly slow in terms of participating across all the IPOs.
All right, Vinit, good chatting with you. Thanks so much for joining in and sharing with us your outlook.
Thank you so much.
If you like this video, then like, share and subscribe to ET Now.